Good afternoon, ladies and gentlemen, and welcome one and all to this afternoon's Markets Now live CPI trading event. Hope you're all doing really good out there today, guys. Good to see everybody. Hopefully, we're going to see some action, which would be really nice after a pretty tired, pretty quiet trading week so far. Although yesterday afternoon did turn out to be quite decent. Got a really nice short in the US 30 Dow and another nice short in the NAS 100 and the UK Brent short all landed. All came in around the same time, so it did turn out to be pretty good. It did turn out to be pretty good yesterday. But yeah, for the most part, it's been quite quiet, quite timid so far. Our European session this morning, for the most part, performed all right. I wasn't really around for it though myself. Currently up 2-1 in gold. Very nice, mate. Well done. Gold's down minus 2.62% so far, and straight on its way to our target, which is great. The only downside about gold for me is the trigger point took place at about 6 o'clock yesterday evening, and I wasn't around. Now this was a market report trade idea. So if you did have pending orders or anything in this one, then well done. I didn't actually put my pending orders up in this one in time. Kind of forgot about it, if I'm honest. But yeah, it's definitely going nicely down to our weekly target at around 41.10, which is pretty good. Still sinking nicely. It would have been one hell of a trade idea as well had we have gotten it off, because about there was the entry. There was the target, and of course the stop loss for this one was above the liquidity point, which is about here. So you're looking at a real decent, I mean, it's insane. We wouldn't have taken that, but I mean, we could have definitely seen a 1 to 4, 1 to 3.5 to 1 to 4 out of that one, and still been really generous with the stop loss. So yeah, it's a bit of a shame, that one, to be honest. Kind of kicking myself, but it's all right. It happens. It happens. Can't catch every single one of them out there. Now, in terms of what's going on this afternoon, let's think about the CPI team. We've got stability in most of the numbers. I would say some of the outliers could cause a little bit of a throw in the markets. We've got the monthly CPI for the month of May coming in basically the same as last time, 0.1% downtick, so not really too much there. And that 0.1% downtick is also backed up by the core CPI monthly figure, which is 0.3 down from 0.4. So there is a match in the data there in those two numbers. But the Fed don't really, I mean, well, of course they do watch the monthly, but they're really laser focused on the annual data. And the CPI annual figures, especially one of them is quite the jump up, actually. So the CPI annual figure for May is at a 0.4% increase in inflation, rising from 3.8 to 4.2%. And that's quite the jump. Now, of course, these are just analysts' expectations. They are subject to be wrong, and frankly, most of the time they are. But nevertheless, if they're thinking that could be the case, then you know it could be quite the jump, and especially will be quite the jump for our trading assets this afternoon, which are all so incredibly sensitive to any news on inflation. So there is that to consider. On the flip side of that, we also have the core CPI annual figure, which is at 2.9%, up from 2.8. So another one that's actually increasing. So today, team, I would be putting less emphasis on the core figures and more on the base. So yeah, that was the right thing to say. Yeah, so more emphasis on CPI, less on the core today. That's what I think everyone's going to be doing. That's what I think the commercial is going to be doing as well. So if we do take that into consideration, we have a 0.1% downtick in inflation monthly, but a 0.4% uptick in inflation on the annual, which are going to counter each other a tiny little bit. But for the most part, the annual figure will swallow the impact from the monthly. Okay, little bit of a long-winded way to say Let's just keep our eyes peeled on that 4.2% to see if it comes into play. If it does, remember that the markets will have a relatively large portion of their money priced into that already. So if it's a 4.3% figure that comes out today, then I do expect the volatility strike to be quite the show. I think it will be quite the impact event, to be honest. Whereas if we see a 4.0 figure, 4% on the dot, which is a 0.2% increase over the 3.8, but of course 0.2% down from the analyst expectations, I think that'll be a non-impact event. So I just do, because it's still a 0.2% increase over the actual figure. It's a 0.2% decrease from the analyst's expectations, which is what the money's going to be priced in based on. It's just going to be a bit of a non-impact event. If it comes out at 3.8 or lower, all hell is going to break loose. We will see massive volatility strikes in the market. 200 point moves, 200 tick moves. US 30 Dow Jones 250 pips in the space of a 1 minute candle. It will be glorious. It will be very fun. The chance of that happening, probably 1 in a million. So don't count on it. Don't bet on it. Good afternoon, Tony. Good to see you. So that's where my thoughts lie with the CPI. Now, of course, if we do get a beat or a miss on the figures, you guys have, we've all been doing this for a while now. Ultimately, you're going to be looking at a beat in the figures, meaning that stocks are going to be selling off, or historically that's what they should be doing anyway. Sometimes not, but that is what they should be doing. If it's a miss in the data, stocks are going to rally. We'll have to take a good look at the US 30. Sorry, not the US 30, the US dollar as well, to see where that's trading. We haven't actually looked at any DXY analysis for a little while now, just because of our lack of interest in the FX space, I suppose. We are going to be paying the FX space some attention today, though. We are going to be looking at the Euro USD, for example. We're going to be looking at the USD versus the Japanese yen as well. We're not going to be focusing on the USD CAD. Got the BOC interest rate decision this afternoon. Definitely don't want to be stuck in anything before that one kicks off. So let's have a look then at the DXY first of all. So the DXY is still very much trading between the range. Interestingly enough, it has made its way up to the highs of the range at the moment. We've been resting there for a couple of days, currently trading at sort of the 100 point, just sub it. I think if the CPI is going to be a beat on the analyst expectations today, which I do struggle to see how that would happen, but if it does, miraculously, then I genuinely think the DXY could pop. It could pop. It could have a good stab above, say, 100.45 and go for a real run up to the 100.72 point, which would be at the top of the liquidity zone. And bear in mind, we haven't actually been there since 2025, a year ago. It was May, so it was more than a year ago since we came up to this high. So it'll be interesting to see if today does carry the weight that we might need to see that DXY pop. Alternatively, if the data is a miss today, DXY trades back down 99. I am really confident saying that as well. I do believe the DXY probably have quite a downward shock. Obviously, the data needs to support the level of that shock. So if when I say a miss, it's not by 0.1 or 0.2, but a 0.3% miss or a 0.4% miss. I believe that the market will dump, and we could see the DXY down at 99. If it's a non-impact event, DXY probably doesn't change. It probably remains exactly where it is at the moment, to be honest, and doesn't give us much of an indication of any kind of change whatsoever, which is always a risk in this day and age. Always a risk. Now, moving on down, let's work our way through a few trades. Then we've got plenty of time. I decided to come on a bit earlier for this particular session, rather than the 15 minutes before, just be a little bit more relaxed, I suppose, and not rushing in the last minute. Excuse me. So, starting from the bottom then, USD versus the Japanese yen. Currently trading 160.50. It's had a good old run to the upside, this one. Been trending up for a while now. We look at the daily time frame. We can see that we're up against some big liquidity here. Got the 1, 2, 3. So what we're going to do is we're going to zoom right in. I'm going to grab that level there and place that level on top. I'm going to go back down to the 15-minute time frame, and then that now becomes my trading margin. So a long in the USD yen today is going to be, let's say, I'm going to put a zone about there. So that's going to be the long margin. The short probably about here. I'm going to increase the width on that though. Yeah. So that's about what I'll be looking at for the liquidity down below. Breaker structure for this one lies at that point in there. So we've got a decent no man's land now. I mean, this could increase in size, to be honest, a little bit. I wouldn't mind if the USD yen travels further up, maybe 160.58. I'd still like to get in for a long on the USD yen, even if it trades up to about there. It would close the gap a little bit as well. The margin at the moment seems quite significant. And if we don't get much of an impact event this afternoon, we're just going to be tagged into it and then just sat waiting. So I'd rather not, if possible. But this becomes the no man's land anyway. We've got the trade short. We've got the trade long. So maybe a 1 to 2.78-ish. Something like that, I would say. It's quite decent. Like I said, have to sit and monitor the long. But at the moment, I mean, it's going to look very, very healthy. Incredibly healthy. Yeah. Quite a nice 1 to 3.2. So something along those lines for the UJ. No pending orders as of yet, though, team. The no man's land on that one is a little bit too tight, so I'm not going to be feeling the excitement for pending orders on it just yet. Right, let's move on up to the euro dollar. Okay, we've got an ascending level. Yeah, ascending level rising up through there. I quite like that. That's a pretty decent tripwire. We've also got that one up there as well. Don't think I would include both though. I'm just gonna have that lower one in there. Just a point of reference. Not take any trades above it if I'm going short. The structural point for this is going to be about here. So then the breaker structure underneath this area here, actually, I'll tell you what, that is going to be the good breaker structure point, isn't it? That right there. We drag that one this way. Yeah, that makes sense all the way back. So then this becomes a trading margin for the short. Nice path of least resistance, apart from this one here. But we'll already have a few pips in the tank by the time we get there, so hopefully that'll be okay. Plus we're trading news events here as well, and news events don't tend to follow intraday points like this too closely in the throes of the action. So we'll just have to have a bit of faith. Stop loss at around 115.37, yielding a 1 to 2.57. That makes perfect sense. It's nice little trade that. The long for the euro dollar. The trades go the other way. Slightly difficult one, really. I mean, obviously the instantaneous choice is this area in here, right? Yeah, this makes perfect sense. But I don't think the availability is there for us. I mean, we've still got, well, it's 1:15 now. We've got another sort of 15, 16 minutes to go. It's a lot of time versus room to breathe in this area before getting in and then trying to make a profitable trade out of it as well. And then the secondary choice, of course, is the breaker structure of the highs up here. And that is for the move back up to the previous high. But that seems excessive though, you know. That's a jump from 115.40 to 115.75. Back in the day, absolutely doable. That was just a regular market open for the EU. Now, not so much. Things have changed. Things have changed a lot in the space of time. So I'm just not entirely sure. I think I'm going to come back to that. Provisionally, I will stick with the long. Provisionally. But I think when we're going back through the run through of adding trades to the pending list, I might review that one. It very much depends on whether Euro USD is actually trading at the point in time. So let's get that done there. That's that one. Right, let's move on up to the metal markets then. So, of course, we already did touch on gold. Bacon Dude's already got his gold in. And honestly, I'm really hoping it goes down to TP for him, because that is exactly where I want to buy into it. So I'm just purely following the market analysis report this week on this one, guys. Buying opportunity takes place down here at around 41.08. That's the place for me. So market sells off. We hit 41. We break structure at 41.20. Up and away from there. That's what I'd like to see. Now, I can't exactly provide a trading opportunity, the explicit details of a trading opportunity in it yet. But at the same time, I think this is, I think that's what's going to happen. Now, if it doesn't reach the low here and the market releases the data, the data's released, and we, for example, get a whopping miss in the data, gold is going to spike 42.70. It'll be instant, instantaneous. So do be prepared for that. If it is a slight miss in the data, it'll be a non-impact event and nothing will happen. So there's kind of, no matter what happens today, it's probably going to be all of something or nothing of, or something and nothing. Yeah, I think you're onto something there, Bacon Dude. Yeah, it's generally what I would recommend most of the guys do. I know you've been around the block a few times, so I'm not going to teach you how to suck eggs, mate. But yeah, generally that's what I would urge people to do. That's what I do. The other thing, of course, is if you've got a trade in profit. So, for example, if you did take the trade, here, for example, your target profit down at the market report level, that's kind of like your trade. Then what you would do is you would bring your stop loss down and you would lock in that profit. So then you bring your stop loss down, say bring it down to another structural point. We know, for example, that we've got a structural point here and here. So we'd drag a zone in there, bring your stop down to here. That way you've covered yourself. Even if the market does spike, you're still going to cover yourself, even with slippage in tow. You could even do it. You could even go even more further than that, right? Because you've got the structural point there as well. So you could bring the stop loss down to this area. Still have a nice margin above the zone to account for any wick throughs. And you've got a decent little trade. Yeah. Well, if you're locked in, then just don't worry about it, mate. If you're locked in, don't worry about it. I mean, it's a real 50-50. The analyst expectations are saying that the inflation numbers are rising, and that is because of the direct result of the Middle East geopolitical situation. Energy shock. Demand for prices goes up. Or not demand for prices goes up. Demand for fuel goes up. Prices go up. Everybody continues paying because what else are you going to do? Inflation goes rampant as a result of the oil shock and the fuel shock. And so it does make sense. Inflation should be higher. It should be rising. It's just a case now of how high is it going to rise? I mean, a rise in a downward trend in inflation is essentially the data staying the same. So if it stays at 3.8, that's still going to be considered as sticky inflation, which is still going to be quite bullish the dollar, quite bearish everything else. If it goes to 4.2, which is a 0.4% increase, as we obviously alluded to at the beginning of the session here today, that's a big increase. if it does even more than that, then gold's going to be sinking sub 4K. Definitely, it'll be definitely sinking sub 4K. We're looking at 3K by the end of the day easily. 39 or whatever, 39.50. So yeah, there's a lot to consider there, really. But if it is one of those baffling events where the inflation is a miss as a result of whatever it might be, I have no idea why it would be a miss. Economically speaking, it doesn't make sense that it would be. But we've all been wrong before. I certainly have. And if it is a miss, then gold's going to absolutely fly. And don't make no mistake, guys. Okay, the market sentiment today is that the inflation is rising. Okay, so that's where the market's priced in, the majority of the market. But because the market has that sentiment, the shift that we will see if there is a miss in the inflation data will be significantly more than if the data is as it should be. Yeah, so it will be much more of a surprise to the markets if the data's a miss than if it's a beat. So there is that to take into consideration as well. But the chances of it happening again are so slim, it's almost not worth talking about. Anything can happen. So yeah, we'll just have to sit tight and wait and see. We've only got 9 minutes to go anyway. Right, so yeah, in terms of trading opportunities in gold, then look, I mean, you probably be able to get away with a long between A and B. That's what I would say. Obviously, this is not a live trade idea, so we can get rid of that. So yeah, you'd probably be able to take a long in there and get out in here. Very, very nice, quick and snappy little trade for over 0.5% in your accounts. Probably looking at around a 1 to 2.42, something like that. So that's a nice little trade there. The alternative is, of course, the market drops down, bites into 40.90, 41. We get the breaker structure, probably take place at around 41.16ish, 41.15. And then we buy it back and we go back up all the way to 41.61. We'll be able to do some of that stuff in real time though. That's the only trade idea that we've got at the moment, and there isn't any short availability here at the time, so we'll have to let the shorts go. Now moving on up to our energy markets, of course we landed the UK Brent short, which is great. Natural gas up 2.78% today. Had a really strong breakout this afternoon as it happens. Nothing to be said though on it from this point on though, guys. There really isn't. It's just kind of sitting on your hands. Nothing to be done about it this afternoon with the CPI either. Moving on into the US indices, some of them are looking a little bit confusing. The US 30 Dow Jones in particular is looking confusing. The NAS 100, we can always look to trade previous highs, previous lows, so that's quite straightforward. So the short under there, what about there for entry? Target profit down at around 28.22. I'd like to have my stop loss all the way up there at 28.69. That gets in both this area and this area. Makes me feel a little bit safer about things. So I'm probably going to go for that one. And the breaker structure for the long trade is there. And the target profit for the long trade, I mean, you could take it all the way up to the zone above, but I wouldn't do that. It's too greedy. So I'd probably go for around this. So entry above here, target, and stop loss. Yeah, something like that. Not bad, actually. Not a little bad setup, that NAS 100 today. I don't tend to like trading the S&P and the NAS together. It's usually the S&P of the Dow or the NAS and the Dow. But really, really not liking the US 30 Dow Jones today. Yeah, really not liking that US 30 Dow Jones today. We've got to wait for a break above liquidity before we can get involved in that one. Then you've got the breaker structure for the long, which is directly above that. So there's no long availability in it whatsoever now. The short availability is only coming on side once we get the breaker structure here. That's where the shorts really start to get interesting. So then we've got this area. We're a rock stuck in the middle of nowhere. A rock in a hard place, aren't we? The most recent price action is honestly the most proof I need. It's the best proof I could possibly ask for as to why we don't want to be trading the US 30 Dow Jones today. Looking at this, this is just not conducive to productive trading. So I am going to avoid that one, unfortunately. The S&P is going to have to take it. We've got the breaker structure below here. We've obviously got the low down below at this point in here. And I'm happy taking the trade between these two zones, which is about there. So that's that one. In terms of the long, the breaker structure for this one, very similar to the Dow Jones actually, is all the way up there, which means we won't have well, I mean, yeah, that could work actually, yeah. This is the problem is it's very far away from where price is trading at the moment, so we're really gonna have to count on a big move today. But it also means that we're not going to get wicked into anything by accident. That is the benefit. That's the pro. So I'm not going to moan about it. It's a good thing. I think it's a good thing. And we can take it from there. So let's download that one as well. Right. Get ready, guys. I'm going to start firing out these now. We've got 4 minutes to go, which is a perfect amount of time for us to start punching some numbers in. That's those ones. Obviously failed to download. Did I send gold already? No. Wait. No. Download. Download. And I can't believe I didn't do these already. I swear I did. Did I do the USD yen? I can't see. Yeah, looks like I did. Right. Okay. Gold and the Euro USD. Right, there you go, ladies and gents. Right, so hold fire on the pending orders for the USD yen short at the moment. Definitely consider the one for the long though. So long USD yen. Pending orders of both sides of the market for the Euro USD. Pending order long for gold, and then use just some common sense for the US stock markets. So for example, I would put a pending order in for both the S&P 500 trades. I'd put a pending order in for the long NAS 100 trade, but maybe not the short, because the price is just too close. All right, we've got 3 minutes to go, so let's get cracking on. All right. Couldn't have asked for better timing, actually. Right. 5 seconds. 4, 3, 2, and 1. Let's go. Okay, we've got a miss in the numbers for core CPI monthly. It's 0.2 rather than 0.3, down from 0.4. Everything else is as expected. Everything. It's all as expected. 4.2, 2.9, 0.5. The only difference is the core CPI monthly figure is 0.2, which is down from 0.3. So, I would expect, unfortunately, a non-impact event completely, because everything is as expected. We may get a little bit more of an effect later on this afternoon from the US Open, after the US actually get to their desks and start trading the data. But the bottom line is, guys, most of the markets are already priced in for this anyway. So, yeah, that's where we're at. Let's have a look, though. USD yen, obviously, there at the moment. Didn't manage to get in the short because we were already trading down there, so I didn't put a pending order in. A shame as well, because the damn thing almost completed in one go. Euro USD's here, so this is I'm really happy that we got such a wide separation between the trades here, because it means that we haven't been wicked into anything on the non-impact, which is good. We've got gold, which has had a little bit of a spike up, nothing too extreme, but would anticipate that one probably to be short-lived. I would say it might get to around maybe 41.90 and then die a death and continue trading lower. Even if it does make it that high, I would remove the pending order in gold long though, absolutely. And then as far as the stocks are gone, we've got the NAS 100, which has just been tagged in, unfortunately, and that's it. So please undo the work. We need to remove the pending orders in gold. We need to remove the pending orders in the Euro USD long and short. We also need to remove the pending orders in the USD versus the Japanese yen long. If you didn't add pending orders anywhere, then you're probably wiser than I am. A lot of number punching for no reason. That's all right. So, as expected, guys, we called it at the beginning of the session here today. We said that an expected data set would equate to absolutely nothing taking place. The DXY is unchanged. Currently trading at 99.45, which is exactly where it was trading at the beginning of the day. So that's that. We have had a couple of 15-minute volatility strikes, but these candlesticks are incredibly weak in comparison when weighing them up to, for example, Friday's non-farm payroll, which in equal measure was actually not really that much of a surprise. But yeah, we can see some of these candlesticks here, and this is our CPI one. So not very impressive, I'm afraid. Not very impressive. So in terms of what we can be maybe expecting from the Fed, so the data, yes, not very fun to trade itself, but it's certainly going to have an impact to the Fed in their monetary policy outlook. We are looking at inflation really coming back to bite the US on the arse. Okay, that is the long short of it. A 4.2% annual May figure is a big increase in inflation over the year. That's a 0.4% bump up from the previous figure. We also have an increase in the core CPI annual figure. We also have an increase in the monthly May CPI figure. And the only one we got a miss on the data with was the core CPI month over month of May. And that's the only one. So inflation is there. It is sticky. It's not going away. And the Middle Eastern geopolitical situation has only increased that issue for the Fed. Now, of course, with a new head of the Fed as well, we need to take that into consideration. What is he going to be what's his policy measures going to look like? The word on the street is that he is much more hawkish, much more aggressive than Fed Chair Powell. What that actually looks like in real terms, I mean, who knows? We need to see evidence of it first before we can it's just speculation, isn't it, at this point? But it could be quite detrimental. We also know that he's got nowhere near as much of experience as Fed Chair Powell, so it could be a ticking time bomb. It might not be. It might be the best thing that's ever happened to the Fed. But personally, we just have to be careful at this point in time and wait to see what he brings to the table. The next Fed meeting is coming up. I think we're only a week or two away, I think. And it will be interesting to see what happens in that meeting. I mean, with inflation numbers like this, could we be looking at a rate increase again? I think we possibly could. Maybe a 0.25% rate increase for the US, which would be pretty detrimental to a lot of different industries, to lower to middle class working people as well. So yeah, there's a lot to consider there, I suppose. So we'll have to keep an eye on it, and we'll do our best here at the UTC to paint the picture as it happens. And yeah, as always, create the trading opportunities wherever they may be. Unfortunately, not bloody here, are they? Not bloody here, that's for sure. Right, guys. Well, I guess I'm going to wrap things up there. That's pretty much a wrap for me. In terms of the US Open this afternoon, as is usually the case, I would just focus on the trade ideas that we've already provided. So, the S&P long up there, for example, the short down here makes perfect sense. If you want to go down to something on a 1 minute time frame, you could even look at trading the margins between the breaker structure points and this big zone in the middle on the S&P. That's not looking too bad. The NAS 100, for example, I think both of those are really nice trade ideas. So you can look to go for a second attempt on this one if it loses out on the first attempt. This short down here is looking really nice still. The US 30 Dow Jones, I would not touch it with a barge pole. So you do with that information what you will. And yeah, and we'll go from there. All right, guys. So I'm going to love you and leave you there then. Have a fantastic afternoon. Good luck out there, everyone. And I look forward to catching up with you throughout the day as it unfolds. So I'll see you then. Cheers, guys. Bye-bye.